Day.
Will this new mortgage assistance plan satisfy populists in the Congress?
Our Fox panel is here to talk about that, including Peter Schiff, author of Crash Proof, Pat Powell from Powell Financial, Brenda Butner from Fox News, and Quentin Hardy from Forbes magazine as well. So, Peter, what about this? There was speculation out there, and some of the people who speculated were pretending that they were going to actually live in these homes. Is there any way to prevent them from getting bailed out?
Well, sure. I think almost everybody was speculating. Even the people who were planning on living there believed the houses were going to appreciate. That's one of the reasons they were willing to commit to these huge mortgages. But we got to get to the root of this. This is all a gimmick. The borrowers don't need any help. They have all the cards. They can walk away from these mortgages. Their liabilities, the typical subprime borrower, even prime borrower now with an ARM, it's not a question of payments. It's a question of the mortgage exceeding the value of the property. They can walk away from these things. The government doesn't need to do anything. And ultimately, the lenders are going to be forced to negotiate with these people and reduce the principal, the value of the mortgage.
Let's get
in a house and have negative equity.
Quentin, you know, it looks like Republicans and Democrats are behind this. Is that enough to get it going?
Well, it'll get going. Something will happen here. And I must say the banks are really just acting like local bankers used to. Somebody's in a jam. You give them a little extra time. You try and help them along. You sort out who's really going to pay and who's going to run away. You know, they did all these consolidations and all these roll-ups and all this bundling, and they lost sight of the fact that housing is often a local and specific situation. And now they're trying to remedy that a little bit.
Can they that way, Brenda, or need there be something else like Ms. Day suggested?
No, if she wants to get Congress and courts involved, give me a break. And I've had lots of guests like her in my house, by the way, too. You were very, very polite. I would not have been so. Look, it's in everybody's best interest that the people stay in their home. That's the bottom line. It's in the bank's best interest. It's in the family's best interest. I think that's being forgotten in all this.
If they can afford it.
And they need to know. I mean, a lot of people actually don't know that they can go to the bank and say, I'm having trouble. I don't want to foreclose. The bank's going to lose money. They're going to lose money. So I think this 30 days is a good thing. Look, I mean, Ms. Day was, you know, said it didn't go far enough. Well, it does a little bit.
Pat, if we keep this to dollars and cents here, who comes out the winner when it comes to the business end of all of this?
Actually, everybody does. The banks come out the winner if people are actually making payments on their mortgage. If they take a 5% rate instead of a 6 or 7% rate that nobody's paying, they're winners. People who stay in their homes are winners. And quite frankly, the entire economy is a winner if we don't have these massive foreclosures. So I think it's a really smart and win-win situation for everybody.
But remember, just keeping people in a home, even if they're making payments for a while, if the home is worth $50,000, $100,000, $200,000 less than their mortgage, they are not going to maintain these homes, they're not going to repair them, and they're going to be bigger losses.
Primary residence, Peter.
Because they're not going to throw money down a rat hole. If your house is worth negative $200,000 and all of a sudden you get a $30,000 repair bill, you're not going to sink more money there. You're going to ignore it. You're just going to try to live with it, or you're just going to abandon the property.
Well, Peter, that's nonsense. If your house is worth negative $200,000, you probably had a house that was $1 million. That's in the upper areas. Look at the reports. The upper income areas aren't falling apart. What's falling apart is the lower areas on the outskirts of town.
There are houses in Vegas and Phoenix that are down 40-50%.
And what's really important is that no deadbeats need apply.
It is a very lumpy situation.
Hold on, Quentin. What is it, Pat?
What's really important here is no deadbeats need apply. And they are trying to weed out the speculators, the people who are into the house flipping business. This is a reasonable, rational compromise, and the wonderful part about it is we can keep Congress out of it. When you start getting Congress rethinking the law and redoing contracts and getting courts involved, this is going to drag on for a long time and be very expensive.
When you look at the market apparently likes what they see, at least so far. We see a lot of the housing stocks helping to boost the Dow right now up 200 points.
Yeah. Well, even if you're negative equity by $20,000, people are still not going to have incentives to make repairs.
Oh, you are so positive. I would fix my fence if I just had $20,000.
We got to leave it at that. The accused and the accuser. It is. So are U.S. car makers finally gaining on foreign auto companies? Let's bring back our Fox panel and ask them. Quentin, first to you. Quentin, what do you drive?
What do I drive? I drive a Saturn and a Subaru.
All right, so you split it between the Americans. What do you think? Is it possible that Americans might be gaining on the foreign competitors?
Of course, it's still a very strong brand. It's associated with larger cars that probably won't do as well in the developing world, but they can retool and respond to the market and build well. They get their cost structure underway, which seems to be happening somewhat. It's great for them, yeah.
Pat, what do you drive, and what do you think about this opportunity for the U.S. automakers, which have been struggling, frankly, to kind of get that edge once again?
Well, I drive an Acura, I'm sorry to say. I'd love to be driving an American car, but I think there are just such intense structural problems in the entire American industry between the cost of labor. I think you have a capital-intensive environment. You even saw Toyota come out with the 7-year car loan. We're in the middle of a credit crunch that there's every reason to expect will continue for the rest of the year. So I would like it to be true. I would hope it would be true, but I'm not optimistic about it.
By the way, I remember when Mr. Protectionist was asked what he drives. Pat Buchanan drives a Mercedes, by the way.
No, it's a great question. It's one, yeah, absolutely. In fact, I haven't had a U.S. car, honestly, since I had a Plymouth Barracuda way
Oh, I love those cars.
ever. And I've owned Toyotas or Hondas since then. But this year, we are looking into getting an American car. I don't think, though, that they're really going to make a big turnaround in the U.S. But we are seeing it in Latin America. GM is outpacing Toyota in Russia, in China, 2-to-1 in India. So they really are making gains. But it's a whole labor issue, I think. And the American people just aren't used to finding them as reliable, although that is changing a bit.
Well, Peter, if what Brenda says is true, that it's a labor issue, that's something that if they can identify it and try and fix that problem, then we get to the cars themselves and the design here, and maybe if they get it right soon, it might work.
Well, hopefully. I mean, I've been a bear on GM for a long time, and they still have a lot of problems. You know, their interest in GMAC, and the domestic market is going to be in trouble because Americans really have borrowed too much money against their cars. They have 6- and 7-year car loans now, and we're going to be in a recession. So what they have to focus on, of course, is the global market. I mean, it's not convincing Americans to buy American cars. It's going to be convincing the Asians and the Europeans to buy American cars because that's where the growth is going to be. Americans, we have too many cars. A lot of Americans, I think, are going to be trading in their cars because they're not going to be able to afford to drive them. But I think you have a booming market in Asia, and that's what GM has to do, is concentrate on how to get exports into the growing auto markets.
Quentin, one thing we haven't talked about are the buyout packages. A lot of buyout packages being offered to the workers, particularly, of course, to the union workers. They want to clear the payrolls to try to get a little more balance to what they pay workers overseas. Will there ever be such a balance?
Probably not unless there's national health care in the United States because they're competing against the Japanese who do have national health care. That takes away a lot of their costs. GM agreed to pension and health care situations in 1947, 1948 that just guaranteed the sun and the moon to workers. The world changed around that, and they really didn't adjust very quickly, and they're paying the price for that. Overseas, they will not have that problem, however.
But Toyota produces cars here in the United States that give lots of jobs to Americans. They are able to find good labor here. It's just starting out at a place that wasn't 40 years ago.
Let me just give a nod to General Motors here. Let me just say about General Motors is they got in on the Chinese ground floor. They have a Buick plant in China for years. And so they got smart on that level. It's just a matter of getting their designs up to speed.
The sum of all their smartness, in my opinion, is just not enough. They have a few smart things, but you just have to add up all the positives, all the negatives, and in my book, there's negatives.
Although they have been winning the reliability race. A lot of people, in a lot of polls, they've been seen as much more reliable cars than the Japanese.
The problem is when you travel around, you're in Asia, I mean, you see very few American cars on the road. I mean, I see Caterpillar.
But they're making inroads. They are making inroads, as Brenda was saying.
They're outpacing Toyota in sales in a lot of emerging markets.
But Quentin, if a company like India's Tata comes along with the small people mover and they get that Asian market of India and China, what does that mean for the U.S. companies?
Well, look, I was 6 years in Japan, and the American cars were a real status brand. That was the sign that you'd made it, and it was cool. The problem was they were too big for most Japanese roads, and the car companies really needed to adjust. I think this is a tremendous opportunity to learn. That Tata car, $2,500. Isn't that right? I mean, it's incredibly cheap. GM is going to learn about efficiencies in manufacturing to try and hit that price point, which they could bring home and make themselves stronger here as well.
I mean, it's not like they're new to the automotive industry. They have been, the granddaddy of the car companies. If they're going to learn, I think they really have the slowest learning curve of any company that I have ever seen anywhere.
Well, I can say this about the Tata. Hold on, Quentin, with the Tata here, I mean, there's a lot of discussion about how it wouldn't pass the U.S. safety standards at this point. So, Quentin, you look at something like that.
No, remember Honda way back when, this is when you were like in elementary school, Liz, but Honda had a car for $1,600 they sold in the U.S. Only problem was it kept blowing off the bridges. It lasted about 6 months. It just wasn't built for anything but urban use.
The Volkswagen sold a car for $19.99 for years, the Volkswagen Beetle. I mean, I can't even remember how many.
By the way, the
years that was on
smart car, those tiny little smart cars,
Those pass.
They pass very well. In fact, they're built like Sherman tanks.
And what are they called?
Go ahead, Quentin. Quentin.
Pat, to get back to your thing, I think the SUV kind of killed them for a while. They got this big car mindset, but they can move away from that.
Okay.
Well, so we end on a positive note.
Yeah.
You drive what? You've got the car. You don't have the car.
Believe it or not, I have never owned a car in my life. I have a zero carbon footprint. I am greener than Al Gore. So take that, Mr. Gore.
Do you have a license?
Well,
Yes, I do have a license. I rent cars when I
She's
need
not
them.
American.
We do the hybrid thing too, but we've got the Acura SUV and GMC Envoy. And it's a great car. It's just a gas guzzler. They got to get up to that hybrid thing at that point.
Someday I'll grow up and get a car of my own. All right, a hard high.
Borrow mine.
Thank you.
Yellow taxi, right?
Yeah, exactly.
There you
A
go.
taxi and a subway. A hard high fastball for the man. Types are choosing sides. Will big business end up getting behind Obama if he emerges as a Democratic frontrunner?
Because is the theory you don't want to throw good money after something that's not really going to be a winner? That's the question. Our Fox panel back now to talk about it. Peter Schiff, let's get your thought right away.
I gave my $2,300 to Ron Paul, and that's the only money I'm donating. But yeah, I'm sure that the big businesses, they'll get behind Barack, especially since it looks like he's probably going to get the nomination, and whoever wins on the Democratic nomination is going to win in a landslide. So big business, they want something from politicians. They're always in bed together, so they're going to give Barack money because they think that when he becomes president, they're going to get it back in some type of special favor, whatever influence they can buy.
Pat?
I'm just as jaded. It's all about power. It's all about access. And that's why they're giving to more than one candidate. They are hedging their bets. They want access if that candidate actually takes off. Now, that doesn't say that some of them don't actually believe in the candidates. But when you're giving to 4 or 5 candidates, you're pretty much covering the entire field.
Well, Brenda, John Mack of Morgan Stanley, he raised money for Bush in 2004, but he's just picking one candidate this time around, and it's Hillary Clinton. Not to say that he wouldn't shift money if she doesn't get in, but that's who he's going with.
Yeah, I think that's true, especially for a lot of people who lived in New York, the center of much business here, did give to Clinton. But it was interesting to see that we did see Bill Gates and Warren Buffett going with both Clinton and Obama. You're seeing a lot of that. I mean, politicians, important people, they like winners, so they're going to go with winners. And eventually the money will go with the one who looks like he or she is edging forward. And at this point, it looks like that may be Obama.
Quentin, why are you snickering back there?
Well, they like winners. Larry Ellison owns Oracle, but he gave money to Rudy Giuliani. Clearly, he is no Oracle.
Right.
If you look at the money these guys give to this, it's sort of like, who does the Pope like in the Super Bowl next year? There's no correlation there. It's outside their skill set.
Well, there are,
but,
Peter. There are some other ways in which, again, $2,300 isn't a lot of cash. But there are these things called bundlers.
Oh, they're lobbyists.
Sure. Well, okay, let's stay with you for a second there, Quentin. You can do lobbyists. You can also bundle your money. You can also contribute to organizations that do quasi-political campaign, or at least beating up on the other guy.
That's right. I mean, they give to political action committees in size. They really will give after the election in terms of the lobbyists and setting legislative policy. Right now, their money is around sentiment, what they think. In the end of the day, business is about efficacy and returns, so it happens once the laws start getting made.
Peter, Lloyd Blankfein, the CEO of Goldman Sachs, has put his money with Clinton and Dodd. Obviously, that's a play for Clinton at this point, along with Jamie Dimon of J.P. Morgan going with Clinton and Dodd. Do you get a sense that Wall Street also wants a change? I mean, all these Wall Street names going for the Democrats at this point.
Well, again, I think they can see clearly that the Democrats are probably going to win, and I think they might as well align themselves. I mean, I don't see how it's possible for John McCain. I mean, Bob Dole couldn't win, and I think he's not even going to be as strong a candidate as Bob Dole was. And we're going to be, remember, the election.
But the national polls are showing very close race here with both Clinton, Obama, and McCain.
Yeah, but I'm thinking ahead. I'm thinking of what the economy is going to be like come election day. I'm looking looking at how much worse the recession is going to be, how much higher oil prices will be and food prices are going to be. And no one's going to vote to continue that. People are going to vote for change. Even if there's going to be change for the worse, they're not going to care. They're not going to re-elect a party that says, let's continue this. Everything is great.
Well, if they're going for change, the name Clinton is pretty familiar. The name Obama is not as familiar.
He's a stronger candidate.
That's really correct. I think, though, what's really interesting, we're still a long way away from the election, and I think that John McCain has some interesting things that he brings to the table. He can actually swing some blue.
To what extent, even if you see the changing winds coming, and you try to back the money of the changing winds, whether it's Obama or Hillary, do they question whether the policies that these politicians are going to implement are going to help their business?
Again, I'm going to be rather jaded and say no. I think they're most interested in gaining access and power.
It's more important than tax policy or regulations?
Well, you and I would not agree with that. I wouldn't personally agree with that. I would back a candidate that I felt was the best candidate for the United States of America. But we're talking about something different here. I'm really jaded in this area.
These people, particularly the Wall Street guys, they're money people. They don't do things magnanimously in many regards. I mean, maybe Warren Buffett and Bill Gates, who feel that they have enough that they can make this.
They want to pay higher taxes.
They know. They know. Well, Dick Fuld doesn't seem to be worried about it, nor does Lloyd Blankfein. And these guys know what the policies, or at least the basic outlines of the policies, would be for Clinton and Obama. They don't seem afraid and running scared to
No, it's
McCain.
very interesting. And really, there's not that much difference policy-wise between Obama and Clinton, unless you take a look just at the universal health care. There's a huge difference, though, between McCain and the other side, and I don't think you can count McCain out yet.
I think we have a lot as big as you think.
Well, between McCain and...
You know what? There's some huge differences when it comes to tax policy.
Yeah.
When you look at Obama, he's very much in favor of eliminating the Social Security limit. That's a huge payroll tax that's going to have gigantic implications for jobs in this country. When you look at Clinton, the cost of universal health care, as she defines it, is going to put a tremendous amount of burden on the taxpayers' back, as well as companies.
But
I can't leave out my mother's favorite contributor. Quentin Hardy's been sitting out there lonely, waiting for a chance to get in. Go ahead, weigh in on this, particularly on the business end, Quentin.
Well, I think, what you have to look at in this case is that all three are promising something in terms of a more balanced budget and a healthier base, and they all like that. They're lining up with the country in that. The kind of free spending, lack of regulation, lack of foresight mood we've had for several years really doesn't appeal to the larger electorate or to Wall Street. Wall Street benefits from a good, solid base in the healthy country. That's what you see today in terms of the banks trying to establish who actually can pay their mortgages and who ought to be cleaned out. That's what you see in terms of who the country's backing and who Wall Street's backing.
Promises are pretty cheap, though, especially on the campaign trail, and I'm not so sure we're going to see an end to spending by anybody who gets in there.
And $2,300 is not a lot of money to these players.
To the CEOs, I was going to make that
point. For most of these guys, $2,300, they got more money falling behind their couch than $2,300.
Oh, boy, I'd love to clean out those couches.
I'll look under the cushions
Absolutely.
there. Thank you.
Thanks, gang. Well, a lifeline for those struggling to keep their home. Very much. Well, of course, we're talking about Yahoo for the whole week now, and there was a lot of focus on the discontent by shareholders, but some Yahoo employees probably aren't very happy with the company's latest moves.
First, Yahoo rejects Microsoft's takeover offer of $44 billion, jumping. The stock started charging ahead, but now Yahoo is cutting 1,000 jobs. That had been previously announced, but some of those employees will be offered other positions, some will not. Would the companies be better off if the folks who ran the companies were the ones who were let go?
Our Fox panel is back now to talk about everything going on with Yahoo, and I got to go to Silicon Valley, my friend Quentin Hardy. So what about that, Quentin? Should the firing start at the top?
David, I got to ask you a question. You said you'd
It
never
always worries me
owned
when you answer a question starting with that, but go ahead.
You said you'd never owned a car, right?
Correct.
Now, have you ever had a hamburger or played baseball? Because right now you're talking like some foreign socialist.
Are you wondering if my accent is going to become Russian pretty soon? Is that what I'm going to slip out a da instead of yes?
Talk like an American, David. You're asking me if top, highly overcompensated executives should suffer instead of letting other people go when they've totally botched their jobs, their company? Doesn't happen on Wall Street, does it?
No. Well, Brenda, that's true. But, if Yahoo stock was having some serious troubles. We've had big shareholders on who've been livid with the way the company was being handled. Then Microsoft comes along. They see their stock jump $10 in a day, and it's pretty much holding much of those gains here. And then you've got the little guys being laid off.
Right.
It just makes you wonder what's going on there.
Yeah, well, you know, the guys at the top may find out what it feels like to get kicked out because they don't have a staggered board of directors. So Microsoft could basically put up its own slate at some point. Microsoft does not like to lose.
Explain what a staggered board of directors is.
That's when some of them come up for election one year and some of them come up for election the next.
They all come up at the same time?
It's just in the next month, I think, in March, that it actually comes up. I'm not sure about the month, but it's coming up soon. Microsoft doesn't like to lose, so I think there could be a battle for the board that even with the poison pill issue could prove very fortuitous.
Remember, the shareholders, they can get out. I mean, there's bids in there. The ARBs are in there buying. They're betting on maybe Microsoft's going to up the ante. So if you want out, you can get out of Yahoo. You don't have to wait for management. The stock hasn't collapsed, and I don't know what.
But maybe you want to change a company. Maybe you know what you believe in the company, but it's taking the wrong course. You don't have to just go take the exit strategy.
Well, I don't know. I mean, I'm not. I know the stock.
But he's for exiting every U.S. stock there is.
I don't know, but I don't want to. Look, these stocks are expensive. I mean, you're gambling when you buy these stocks. The P's are outrageous, and they're earning
anything
their future.
Denominated in dollars is a bad bet from your perspective, correct?
Well, if you're looking for an income stream, certainly. If you're going to buy a bond or a stock that pays dividends, and you're going to get your dividends in dollars, it's pointless. You want to get your dividends from abroad. But there are certain stocks in the United States that earn their revenues abroad that could be good buys. But I still think these tech stocks, Yahoo and Google and Microsoft, I think they're all expensive, and people should take advantage of this rally and sell.
Question, if you don't mind, and that is, people lose their jobs when there's a takeover. There's absolutely no evidence to think that this takeover is going to be good for increasing jobs at Yahoo. The most likely scenario is whatever the 1,000 jobs that are going right now are going to be. There are going to be many, many more if the takeover actually occurs. And as to the CEOs never ever agree to the merger until the CEO pot is very, very sweet.
Okay, go ahead, Quentin.
Come on, look. Let me just jump in here. 1,000 jobs is 1,000 individual tragedies. I don't want to minimize that. At the same time, Yahoo is vulnerable precisely because it didn't cut more people. They have a lot of money losing businesses. They needed efficiencies. Microsoft saw that. They've been trying to buy this company for a year. They finally just got public with it. And by the way, this is a deal that gets done. Yesterday, the board said, we're worth more than that. Well, that's like saying we're for sale, and it's asking Microsoft for a couple more bucks.
But isn't it possible that they can sweeten the deal a little by playing hard to get?
Oh, I think Microsoft
they can and they will because they got all the engineers.
Hold on a second, Quentin. We'll go back to you. Brenda, I didn't hear your answer.
Honestly, I don't think Microsoft would have respected them if they hadn't said, we're worth more, give us a little bit more. I mean, this is
There's a little horse trading
There
going on.
absolutely is gamesmanship going on here.
And the stock is still at $29 and change, so it's held those gains since Microsoft made the offer, Peter.
Yeah, well, I guess they're just going to hold off for a couple more dinners. I guess they want to be sweet talked a little bit more. They don't want to.
The CEO pot has to be sweetened in here.
Quentin, you're out there. What are you hearing from Yahoo employees and people there? Is this emotional? Is this the culture won't work, or is this let's hold out for more coin?
Well, of course it's emotional, and it has a lot to do with how Microsoft takes it over. But they have executives who are well regarded in the Valley who could come down. They keep the Yahoo brand separate. They give it a key mission around beating Google or showing a future. They would have somewhere to go. Now, look, I got to say, what Yahoo has on its side right now is time, because the longer Yahoo spends negotiating, the more engineers they'll lose. Microsoft wants to hold the good people. That's the pressure on Microsoft to throw a few more bucks on the table.
Yeah, but by the way, the longer this thing drags out, the stronger Google gets, and the better prepared it will be to resist the combination of Microsoft and Yahoo. No, Quentin?
Well, that's absolutely right, but that's why Microsoft probably will throw, what, $4 or $5 more bucks a share on the table and try and do the thing quickly.
Long, it can go the other way. And Lucent had a real sweet deal from Alcatel, and they fought it, and they ended up selling the company for less than half of what was the original offer. So you can't push this too far.
All right, well,
they've got to hold goodwill.
We have a staggered panel here, so you guys are safe for the moment. Hey, look at the markets. While we are up about 88 points, we have been.
Just moments to go until the closing bell. Stocks are losing ground, but they're still up triple digits.
Yeah, how about that? Dow up 117 points. What happened? And will the rally continue? Let's take it to our Fox Business panel. Gang, we got this news this morning about Warren Buffett saying that he would prop up the bond insurers, at least a portion of it. That juiced the markets. Is it sort of as we come back down, they're kind of realizing, wait, he offered to help out the municipal bond part, which is the healthy part.
He's not going to help the insurers at all. He's willing to take the only profitable part of their businesses away and leave them with the rest. So I think it's potentially good news in the short run for some of these municipalities. But ultimately, I think they're going to have problems when the recession really hits and they're not getting as much tax revenue from property taxes. They're not getting as much sales tax revenue. I think a lot of these municipalities are going to have problems down the line, even if they have a Warren Buffett behind them.
But let's look at, Pat, some of the bond insurers. MBIA, for example, which had been one of the most stable part of the financial world. You know, these municipal bonds almost never defaulted. And then they decided, geez, everybody's putting money in real estate. Maybe we should too. So they got in. I guess they've written down about, about $1 billion so far, which is more than they've had to write down in their entire history.
Exactly.
Is that it? Is it over now for MBIA?
I don't think so. And I think that's Warren Buffett, and even coming in with this kind of offer, basically he knows that the insurers are going to be looking for capital. And so he was trying to cherry pick in there. Very clever, very good idea for him, not such a good idea for them. And I think that's what also happened in the market. They looked at the GM thing and they said, they're going to restructure some jobs, they're going to work with the unions. Well, when they started looking at the detail, maybe not so good. Yeah. Then they looked at the mortgage.
It takes a while for them to pick it up. Tracy Burns, you're out on the floor there. Was it GM? Was it the Buffett bounce? What are the traders saying?
You know what? It was lack of conviction, as we've been saying all day. Yeah, it was a Buffett bounce to start the day off, but it didn't. They knew at that point that it couldn't sustain. And so we pulled back about 100 points. We also, too, we watched the financials pull back. We watched the home builders pull back. So this was a lot of, I hate to say it, but fluff. We ran up to 200 points, pretty much for no reason. We had news from the Philly Fed, of course. That's what took us off in the beginning. But then we pulled right back down. And hopefully we'll hold here, because this is where we started after the news that Buffett was coming out to hopefully help out some of the muni bond insurers. But, look at the coal stocks. The coal stocks are getting hammered. So there's a lot of profit taking, a lot of money moving back and forth between sectors. But there's a lot more red on the screen now than there was when we started the day today. Even the transports have gone negative. So I think it was, I hate to say it wasn't real. It's that whole, bear market rally, but I think that's what we saw today. Hopefully we can hold this 100 points going into tomorrow.
Volume, Brenda, volume. I mean, you look at 1,300,000,000 shares. That's pretty low. It sounds like a lot, I know, but it's usually about 30-40% higher than that for a day.
Yeah, it is, and you have to look at stuff like that. But I'm not going to spit at a triple-digit gain, honestly, in a market like this. It was very broad-based to begin with. Yes, there's been some selling off.
We're not spitting, we're hesitating.
Oh, okay, just drizzling
a bit. So graphic.
Well, I think this is a real counter-trend day, though. It's typical action. You got rallies in the stuff that's in bear markets like U.S. stocks. The bull markets are all pulling back. Look what's happening to gold and silver today. Silver hit new almost 40-year highs yesterday. Platinum's off today. You mentioned a drop in the coal stocks, but the coal stocks have been on a tear. So all the stuff that's been going up
is down $15 an ounce.
Quentin, what's the hot name that everybody's talking about publicly traded out in Silicon Valley? Is it the First Solar or some of these other names? What's the scoop out there?
Oh, well, the solar stuff is nice, but it's going to get nuked in any kind of rally, in any kind of sell-off, because it's hopelessly overpriced. The multiples are way too high on that kind of stuff. What's doing well are the Ciscos and Microsofts, the kind of reliable standbys that will survive any kind of downturn. They seem to be looking pretty good right now. But, okay, transports are down. Do not head for the bus station yet. Do not leave town. Things will be okay. Look, when Warren Buffett is coming out looking for clever ways to take business away for MBIA, that's great. That's capitalism dealing with a problem and looking to seek advantage. He may eventually make a whole new kind of market in bond insurance, and MBIA doesn't make it to that point. But that's good news. We are slowly clearing out the mess here. We could be a couple more months doing this.
Absolutely.
The good news is bad hedge funds are going down. The clearing out is beginning.
Yeah, let the market work. If the worst thing that happened today is people said Warren Buffett wasn't Santa Claus, he wasn't so generous, so what? He's a businessman.
Exactly.
He did the right thing. And I think that did give some confidence to Wall Street. That,
the stock
the market
fairy will
may
not
work.
save us.
And Pat, the best thing that happened today, from my perspective, was that Congress didn't do, or the White House didn't come out with a really draconian solution to the problem.
Oh, God help us when it does. Yes, you're absolutely right. The more that Congress gets involved, the more that the White House gets involved, the more we should all share shaking our boots.
Well, Peter, bringing it back to the markets, I love this story that Peter was telling us in the break, because we were talking about how platinum had risen, and you made some money in a company called...
Oh, Zimbabwe Platinum.
Zimbabwe Platinum. Okay, tell us what you did and how you made the money. Because people are always looking for ideas on how to make money.
This is an Australian company. You know, it traded in Australia, but the mines are in Zimbabwe, which is a very, very unstable part of the world. And
so
you know,
it was there.
Sure, and there was a bumpy ride. I remember one day we owned that stock, and I think it was down 30 or 40% one night on nationalization rumors. And all of a sudden, it was thought that the government was going to steal the entire mine out from under us. And a lot of people got nervous and sold out, and then the stock just went to the moon. After that, they came to some kind of agreement. But that, you know, all over the world, they mine these metals in very risky places. But look at where these metals were. You know, back in 2000, silver was $4 an ounce. It's $17. Gold was, you know, $300. It's $900. Platinum was less than $500. It's almost $2,000. But look at soybeans. They were $4 or $5 a bushel. They're $13 a bushel.
Quentin,
wheat was $3. It's over 10.
Quentin?
Peter, what's your position, Peter, on scratch lotto cards? Because that is just total gambling. You know, yes, you did well, but would you recommend any civilian go try that?
No, sure. Well, look, it doesn't take rocket science. You don't have to be a rocket scientist to understand that when the governments print a lot of money and create inflation, prices rise, particularly commodity prices.
Peter, we have to warn the folks out there. You don't have to be a rocket scientist to know that commodities can crash as well, and that these governments, like Zimbabwe, for example, can come in at a heartbeat and take over your investment.
That's the risk in the stock, but in the metal itself, there's a lot less risk in owning something real like gold or platinum than owning paper money.
You know,
the politicians can.
Paper money.
Do you have platinum in there?
That's 20-year decline in commodity prices from about 1982 to about 2002, and because of that, we lost capacity in all these various commodities, and we're actually in the other side of that. Commodities are rising in price, and it's really back to supply demand. I hate to put it that way. The world has started to use up the available supply, and the demand is growing. So we probably are still. Excuse me, let me finish, because I always let you finish. We're still probably in the first of three legs in commodity prices, and I think in that regard, Peter and I actually can agree that when we go out 5 years and 10 years from now, we're going to see prices in commodities continue to rise, and they do belong in almost everybody's portfolio, but small dollars, not huge dollars.
But Brenda, there are two things you can invest in: commodity stuff, gold, stuff that's in the ground,
copper,
or wealth. That is the idea that people can invent something that doesn't exist before. That's what all of Silicon Valley, where Quentin is built on ideas. Aren't there any stocks, because we are so good in America at coming up with those ideas and following through, and we have the freedom with which to follow through on those ideas? Won't we see breakthroughs in that area as a place to invest?
You know, in car makers and hamburger makers, David.
There
we go.
David,
I know you
hold on, that's to Brenda. Go ahead.
No, absolutely. I mean, in your portfolio, there's room for both. But Pat made a very important point, and that was the other side of the commodities. They were at that level because they had come down a lot, and now they're coming up, maybe even a bubble
fashion. You talked about, David, the car makers, but you'd hear from people like Frank Holmes, a big U.S. financial guy, and he talks about how China is going to need thousands and thousands of miles of roads because people want their cars. So wouldn't that then stand to reason that maybe GM is the play for the future, Quentin? I mean, you look at that situation and you say they're going to need cars, they're going to need cement, aggregate, things.
I would find out who's making the paving equipment and invest in that before I'd invest in GM. You know, no matter what's driving on the road, they got to build the road first.
We own a company that operates all the toll roads in China. They collect a lot of money. Of course, the more cars on the road, the more they collect.
What
and of course, it's all in renminbi.
What is this company called?
Road King Infrastructure.
Road King Infrastructure. You heard it here first.
No ADRs. Trades in Hong Kong.
All right, so you have to go to Hong Kong.
Yeah, there are, but in general, you're talking about stocks versus gold. As an asset class, stocks are expensive. Gold is a lot less riskier than stocks in general.
All right. Well, we are right here in the good old USA, where the closing bell rings and the market is up triple digits. We're wondering whether or not it was going to hold on to those triple digits. Indeed it did. And in fact, NASDAQ has ended the day in positive territory as well. So as the trading days come to a close, the business day continues. And here's the financial.